What's the key to building wealth? It's multiple income streams. At least that's what millionaires will tell you. 65% of them have at least 3 income streams, and nearly 1/3 have 5 or more income streams. So if you're still tied to your day job, and you're serious about reaching financial freedom, then ditch the cars, jewelry, and luxuries. Instead, let's look into spending our money on the ultimate status symbols, income-producing assets. So, let's dive right in and discover the secrets to building lasting wealth. But before we get started, don't forget to smash that like button and subscribe to our channel Escalating Wealth to join our ever-growing community of wealth builders. Alright, let's get this money party started. Real estate crowdfunding. While building wealth has been proven with physical properties, the real estate crowdfunding sites are growing in popularity too. Instead of the hassle of needing large amounts of money upfront and dealing with the maintenance of owning property, crowdfunding removes some of those limitations. These platforms do the work for you, and instead you choose what real estate to invest in based on your goals. This could be a portfolio of various properties or individual real estate as well. There are a few variations of real estate crowdfunding platforms, but each offers investors a chance to get a piece of the real estate pie. Many initial investments are as low as $500 to $1,000. You can invest in real estate and earn good profits with a low amount. Real estate investment trusts. Ever dream of being a landlord, but the idea of tenant calls and plumbing fixtures has you running for the hills? Enter REITs, the stocks of the real estate world. Real estate investment trusts are companies which own, invest in, or manage income-generating real estate properties. REITs trade on the stock exchange, and you can purchase them just like you would the share of any other company. Personally, I've invested in real estate investment trusts for several years, which has yielded between 3 to 4% in that time. The coolest part? With the purchase of one share, I'm suddenly the landlord of residential rentals, commercial real estate, public storage units, and everything in between. By law, REITs have to distribute over 90% of their earnings to shareholders, which can lead to some seriously high dividend rates. You have to be careful though, as high-yielding REITs tend to be extremely volatile. Want to get really crazy with it? You could buy REITs using 20% of your own money and 80% borrowed money. This approach does a decent job replicating the same leverage experienced when buying a rental property with a 20% down payment. Around this time, it's important to remember the gold rule of finance. There's no such thing as increased returns without increased risk. Timberland. Who says money can't grow on trees? When you own a timber operation, your money literally can. As trees grow, they add more volume and therefore become more valuable for timber harvesting. In good soil, some timber species can grow as much as 3 to 4 feet per year and reach heights over 100 feet at maturity. These big trees can sell for big bucks. Sure, it takes a bit of patience. Depending on the type of tree, from seed planting to maturity takes 15 to 30 years. Soft woods, such as pine, are ready for harvest in just over a decade, while hardwoods like cherry oak or maple take the longest to mature. Bare timberland can be purchased for $100 to $500 per acre, and a mature acre of timberland can be harvested for $500 to $2,000 per acre. Certain tree types, such as walnut, whose straight-grained wood is desired for furniture, veneer, and gunstocks, can sometimes produce over $100,000 of timber per acre. Occasionally, the trees need to be thinned to encourage faster, straighter growth, but even these culls can be sold to help cover operation costs. Want to double down? Certain trees, like walnut or chestnut, can start producing nuts after 3 to 10 years, and these nuts can be sold to generate additional income. Other producers double crop their timberland, planting trees far enough apart to grow other crops in between, or allow livestock to graze on the land for yet another income source. The best part? Trees keep growing, rain or shine, and so does their value. In total, timber typically increases in value by 2 to 14% per year, with taxes deferred until harvest. From 1905 to 2005, timber outpaced inflation by 3% per year, and the NCREIF Timberland Index outperformed even the S&P 500, with an average annual return of 12.88% per year. Although this is a long-term investment, the returns are worth it. Patience on your investment will pay you off. Building an online business. One of my favorites on this list is building an online business. There is a lot of potential work up front to build an audience. But once you create that audience, it can be a great income producing asset. Plus, you can also sell it down the road as well. Online business can be anything from starting a WordPress website, buying an existing website, e-commerce store with Shopify, Amazon FBA, or maybe a digital product you're selling, like an ebook. Many of the businesses that are created online can become relatively passive. Meaning at a certain point, there is not much upkeep needed to continue a flow of income for you. But do note that there can be plenty of upfront work and time to make this happen. But the money you make can be an added bonus and even potentially life-changing. Franchise. Remember the last time you visited McDonald's and that wonderful conversation you had with the store's owner? Of course, you don't, because those store owners are never there. They outsource all the day-to-day operations to any individual else, which turns their franchise purchase into a pretty passive earnings source. A franchise purchase presents you the proper to use a parent company's trademarks, exchange secrets, and proven business plan in exchange for a percentage of the location's profits. The requirements to starting a franchise varies by brand. McDonald's claims one of the most expensive franchise fees, at $45,000, and the initial investment to build or purchase a store ranges between $1 to $2.2 million. Plus, they require you to have a whopping $500,000 of liquid assets. Your return for investing that sort of cash? Well, you'd need to request an investor package to know for sure, but the average McDonald's location spits off $2.6 million of sales per year. Different franchises require different time commitments from the owners though. Chick-fil-A, for example, has one of the most competitive franchise programs in the country. They accept less than 0.4% of franchise applicants, and they require owners to be in store at least 30 hours a week. In that case, you've basically just bought yourself a part-time job. Other franchises, popular franchise Subway, accept a much higher percentage of applicants and allow absentee ownership, which is a much more investor-friendly arrangement. The average Subway startup costs are only $116,000 to $253,000. Well, this idea requires a big investment, but the return on investment is way higher than many other businesses. If you cannot start your franchise right now, don't worry. Invest in other assets until, one day, you become the owner of a multi-million-dollar franchise. And there you have it, our top 5 money assets that can set you on the path to financial success. But remember, investing is a journey, not a race. It's essential to do your due diligence, seek professional advice, and stay informed about market trends. If you found this video helpful, don't forget to give it a thumbs up and share it with your friends who are also interested in growing their wealth. And if you haven't already, make sure to subscribe to our channel and hit that notification bell, so you never miss out on our future videos packed with valuable financial insights. Thank you so much for watching, and until next time, remember to dream big, invest wisely, and work towards building a financially secure future.